Hello and welcome to the 34th lecture of the course Forex in 3 steps. This is one of the last lectures. We will only have one more lecture after this one, and today we will cover harmonic patterns strategy. This is a fairly advanced strategy, but it is very effective in the financial markets, and it's been around for a while, and it is one of the more advanced concepts and strategies in trading. But we will explain it very well, and we will help you understand it in all simplicity and all fairly easy. So what is harmonic analysis? It consists of chart patterns first discovered by Hurst in 1973 and later developed by Scott. It was named harmonic because price moves in waves, and these waves are interconnected with each other at specific ratios. So the pros of harmonics are that it is easy to use, it is easy to determine target and stop losses, and this in many other strategies is an issue. But harmonics makes it very easy to determine where your stop loss should be and where your take profit should be. And thirdly, it has a high success rate if applied on higher time frames. So when you see a harmonic pattern being formed, especially on high time frames, this is a very high probability trades when you take harmonics on high time frames. And this is it's everywhere. Any strategy you see on a high time frame, even if it is a chart pattern, if it's an indicator, if it's a divergence, when things start to develop on higher time frames, the likelihood of it happening and being accurate is more probable. So this is not really a pro, but harmonics are good at having a high success rate, especially when applied on higher time frames. The basis of harmonic trading. So I'll explain this very briefly. It may sound hard at first, but we will take live examples and everything will make sense. So the basics of harmonic trading is two concepts that you need to understand very well. Number one is that price moves in upward and downward waves. As you can see in the examples here, price is usually making either an up wave or a down wave and moving in a zigzag pattern. And the second thing, or the second concept or foundation you need to know, is that price waves come in three shapes: N, M, and W. These are the main shapes you need to identify, and then the rest will make sense. These of course are not yet the harmonics, but harmonics are formed and established by having these foundations, and then a harmonic is created, and I will explain this right now. So this is how harmonic patterns work. Basically all you need to know are the three letters and three shapes that we talked about: the N, the M, and the W. And each one of these, as soon as you identify a shape, it means that something is about to happen, and this is what happens. So let's cover this quickly. Harmonic consists of four phases or four letters, and each high and each low is a letter. So in this case here, we have a low, we have the letter A, we have a high, we have B, we have a low, we have C, and then we have D. And after D, always after the letter D, after the fourth phase of a harmonic pattern, usually price reverses. So as soon as you see D, it means that a reversal is about to happen. And that leads us to having patterns identify whether price is bullish or price is bearish. And as you can see here, we have an N, and an N is bearish, as you can see, because the D is to the upside here, which means after the D, price reverses, and here you have it, the N is a bearish signal. The W is the only letter that can have both a bullish scenario and a bearish scenario, but all I want you to know is that the W is also a bearish shape. So when you see a W, when you have a low, you have a high, and then you have another low, which basically looks like a double bottom, as you can see here, and then you finally get a D, which is a top. You reverse from there, which means that the W is also a bearish signal. Here you have the other W, which is kind of opposite end. So if you flip this to the other side, if you flip it, you will get this shape. So you can call it a W, you can call it a reversed N. I like having it a reversed N, and this is one of the bullish signals and bullish harmonic patterns, where you have the A, you have the B, and then you have the C, and then you get the D. And I know this may not make sense right now, but we will be patient. We will cover the rest of the patterns, and you will understand why we're taking these, especially if you know how harmonic patterns work, but you still get messed up between the different types of shapes. This will help you get very better and get to identify them on the charts very easily. And the last bullish shape is the M, which is basically a W but reversed, and the M is a bullish signal. And because you have an A, you have a B, you have a C, and then you have the D, which is a low, and then price usually reverses when you see this harmonic pattern with an M shape. And here is the big trick. This is why we covered the different types of shape, the M shapes, the M, the W, and the N, because it is much easier to identify these shapes on the chart instead of looking for all this and looking for a crab or a butterfly or a Gartley or a bat or a cipher. These are much, if you open the chart to find a crab, it is much harder to find them. But if you just look for this shape, if you just look for an M or a W or all these shapes, it is much easier to find them, and then it is from there it is also much simpler to identify the crab or the butterfly or the patterns that come out from the main shape. That's why we took the main foundation of the harmonic patterns, which are the three shapes that we covered. The rest comes by time and by practice, and these are the rest of the shapes. And as you can see, they all consist of the three foundations we discussed. So the main harmonic patterns are basically these five, which are the crab, butterfly, Gartley, bat, cipher. Of course, all of them come in a bullish way and a bearish way, but all you need to do, and the simpler you make it, the easier it will be. All you need to do is look for this shape, look for either the M shape, the W shape, or the N shape, and then you will find the rest being very easy. And let's hop onto the chart and take real life examples. And there is also on TradingView a very nice tool where you can use and it helps you draw harmonic patterns very easy. But before we jump into the charts, there's also something that you need to know, which is Fibonacci ratios were introduced into the harmonic strategy. So harmonic patterns are also they consist of Fibonacci ratios, and of course we covered the Fibonacci lecture. But Fibonacci ratios in harmonic, you have to add the levels 78.6 level and the 88.6 level. Also, we add extension levels beyond 100%, and here are the fib levels that you need. Of course, we all use these already, except for the 0.886. We all have the 0.5, the 0.618, and the 0.786. When we took the Fibonacci lecture, we covered this, and we took the main levels of Fibonacci levels that you need to have in order to identify where a retracement may land and may pull back to. All you need to do is add the 0.886 for the harmonic patterns, and also beyond the one you need to add all of these levels. So you need to add the 1.13, the 1.27, 1.618, the 2, 2.24 and the 3.618. Now as soon as you add these levels on the chart, let's open TradingView together. Here we are on TradingView, and all you need to do is you look for the patterns that we talked about. You either look for an N, or you look for an M, or you look for a W. And at first you will mess up a little bit because they all can be similar sometimes, but all you need to know is that there are two tools that you need for TradingView to be able to draw the harmonic patterns. The number one tool is the XABCD pattern, and for this pattern, this tool, you use it for W's and M's only. For N patterns, you use the ABCD patterns. So in this case, as soon as price came up here, I see kind of an, so if I start my drawing from this high, I have a drop, I have a high, and then I have a low. And what does this give me? It gives me a reverse N. It gives me a reverse N, and we said that the normal N is bearish, and we talked about the reverse N, which is actually bullish. And in this case, we can start grabbing, because this is an N, so I use the ABCD pattern, and then I come here, I click on control, and then I draw from high, I take it until the lowest point, and then I take it back to the highest point, and then I take it back to the lowest point. And what do we know? As soon as the D is put in, and whatever confirmation you need, whatever signs of strength you need, whether it's an indicator, whether it's a divergence, whether it's a chart pattern, by using the harmonics with other things, as soon as you identify that there is a pattern, see here, there is a N, there's a reverse N, it's not a real N, so it's not like this, it's the opposite. And the reverse N, of course, is a bullish sign, like we discussed, because where is the D? Usually if you mess up, just where is the D? The D price reverses from the D, and this is exactly what happened in this scenario. Of course, if I zoom down to the 3-day or daily, you will find entry confirmations here, and this is how you combine all of the strategies that we covered inside this course together. All you need to do is you need to start back testing. You need to test the different types of strategies. You need to find out which one you like and prefer the most, and then start combining between them and make it balanced. Do not use many indicators, or else you will not be able to find entries, because the criteria you need to enter a trade, if you use many indicators and many strategies, will be too much, and sometimes the price action will not give you all the criteria that you need. And also, don't make it too easy, so don't just enter on a harmonic pattern alone. No, use entry confirmations, use other strategies such as divergences. So for example, if I add an indicator now, and I see that price, for example, here is making lower lows and the indicator is making higher highs, then this is an indication that price may be reversing, and this is a nice confluence alongside the D, because we know that harmonic patterns work in a way where the D usually price reverses from. And this is just a simple way how harmonic patterns work. Let's take a look at another example. Here is another example, a very nice example on gold, where price actually, the market makers and the people in control of the markets tried to hide this pattern, but the people who understand harmonics and understand how they work exactly were able to find an entry on this beautiful trade from here. Let's explain how we use it. Of course, sometimes you need to exclude some of the price action in order to find the best patterns, and this is what happened here. So all I will do is I will take this part and I will just exclude it from my analysis, and I will start pulling my harmonic pattern from here. So all I will do is I will come here. Of course, I see the pattern now. I'm not sure if you see it, but I will tell you right now. But try to find the pattern by yourself. And of course, I see the M pattern, which is a bullish pattern, and the M pattern, I see it from this low. If I pull from this low, and then of course, because I see an M pattern, I don't see an N, so I will use the XABCD pattern, and I will start from low because this is a bullish pattern, and I will do take it to the high, and then take it back to the lowest point, and then take it back to the highest point, and then take it back to the lowest point. And what do we have here? We have a nice solid M that looks really like an M. It's exactly like an M. And what do we know? That we know that the M is a bullish shape. And when you see an M, it means that D is over here. And what do we know after the letter D, the fourth phase of a shape? It usually reverses from there. And this is exactly what happened. Of course, again, you can use, for example, the 4-hour chart to look for entry. For example, in this case, I see a bullish break of structure. I'm pretty sure there was also divergences, and there was also divergences here, and we had a nice retracement after the break into this demand zone, and we will cover all of this in the SMC lecture, which is next lecture. So make sure you attend this lecture because it is one of the best modern strategies we will cover. But for now, the harmonic patterns worked very well. It is best used alongside other things, but as you can see, the M shaped, we drew it exactly, and we were able to identify where the low was, because we know after the D is placed and we see signs of a confirmation and signs of strength, it means that price is likely to reverse. And as you can see, gold really took off from there. And this is how you trade harmonics. It is very easy. All you need to know is just be able to identify the M's, right? The M's, the W's, and the N's, and also the reverse N. Make sure you also don't forget the reverse N. Just like the past example, it was a reverse N, which is also a bullish one. So make sure you identify which ones are bullish, which ones are bearish. Of course, the cheat sheet, this whole course, you can go back in through this video and take a look at the lecture itself and see which ones are bullish and which ones are bearish, and make sure you memorize them. You may struggle to find the patterns early on, but as long as you're practicing, you will be able to identify them much easier. And that is it for the harmonics section. I'll see you in the next lecture.